All right, Mr. and Mrs. Client. So we've talked a little bit about how to determine maybe the right amount of insurance for you two. Now, are you two familiar with all the different types of life insurance available? Okay, well, that is correct. There is whole life and term life, but actually there's quite a few more types. Would you mind if we just spent a couple of minutes reviewing the different types of life insurance? Okay, terrific. So if we look, we have, first of all, term life insurance. And then the second type of insurance that we have is something called convertible term. Convertible term works a lot like term insurance. The difference is that during the 5 or 10 or 15 or 20 or sometimes up to 30-year period of time, you can actually convert this term policy into a permanent policy without having to do any further qualifications for it. So if somebody gets diabetes as an adult, or cardiovascular disease, or muscular dystrophy, or any number of ailments that can strike us as adults, you're not stuck running out of term insurance, but this insurance can convert to permanent. Now, the next type of insurance is called return of premium term insurance. And what that basically says is you're going to get your money back one way or another. So let's say if it's a 20-year return of premium term insurance, at the end of the 20 years, if you made all of your premium payments on time, you'll get all of your premium payments back. If, on the other hand, you die during the 20 years, then obviously your beneficiaries get the death benefit. After return of premium term, we have something called whole life. And this was popular really with our parents or maybe our grandparents back in the day in the 70s and the early 80s, and certainly well before the 70s. Next to whole life, we have a product called universal life. Then the next one up the scale is something called flexible premium universal life. Then we've got something called indexed universal life, and then we've got something called global indexed universal life, and then lastly we have something called variable universal life. Okay. Just to sort of give you a broad-based understanding of these, I tend to like these down here, term and convertible term, a lot. Why? You get lots of coverage and low cost. I tend also to like these down here. Why? Because we have permanent protection. What's the most cost-effective kind of life insurance? The one that's there when you need it, right? So here we have permanent protection, and it's cost-effective, okay? These products in the middle here, I'm not as big of a fan of, and the reason is sometimes they're trying to do this and they're trying to do that, and they don't do either one very, very well. There are some exceptions. Whole life, for example, or universal life, for example, can be great from a standpoint of estate planning. For very, very wealthy individuals, sometimes that's a good fit for estate planning. But for regular folks, regular families like yours and mine, typically term provides us a lot of coverage for a low cost, and permanent protection provides us long-term coverage for the long-term needs that we have. Does that make sense to you guys? Okay, great. On this side of the spectrum, we have permanent policies. I like them because they provide permanent protection. They are cost effective, and many of these are what we call investment grade insurance policies that provide excellent long-term savings for individuals and are a very cost-effective way of owning permanent life insurance. Okay? Does that make sense? Do you guys have any questions?